Good evening, TheoTrade. This is TotalTheo. You're watching the Theo nightly video for the 15th of December here in 2020, which means December's halfway over. 2021 is right around the corner. But we'll start today's session with new all-time highs in the Russell. This rally in the Russell just continues, and it's playing catch-up to its other index components. So we know the Russell is heavily influenced by the financial ETF, and in part by energy and other stocks. It is, if you're ever curious what's in the Russell, you can take a look inside the Market Watch tab and see the entire Russell 2000, which is all the stocks in here. Notice that each stock is sorted by market cap, and the bigger the box, the bigger the market cap. And there really isn't a particular stock sector. Sure, there's the financials, healthcare, industrials, and others, but there isn't really one stock that stands out. That's not the case in the S&P 500, which we'll see shortly that Apple, it's the strongest stock of the day, actually followed by Eli Lilly. So Apple's the number 2 stock of the day. The number 1 stock was Eli Lilly, was up 6%. Apple was up 5%, and Bristol Myers Squibb and Exelon up about 4%. But this is different because these boxes are bigger. So Apple has the largest market cap in the world, or in the S&P, and that's at $2 trillion. So that's Apple, followed of course by Google, Facebook, Microsoft, Amazon, and that difference is even more pronounced in the S&P 100 and the Nasdaq 100. So this is just your breadth. Markets or stocks that are positive or negative, and how much are they up or down. Back to the Russell though. So for the Russell, it's a small cap index, and again, it played catch up to its index components, meaning the Corona crash happened in March, and the Dow was at new highs. It took it all the way to October to recover to those new highs. Keep this point in mind, which is May, when the Nasdaq made its new all-time high. And they kept going. So tech stocks such as Apple, Amazon, Facebook, etc., they were strong, getting stronger, but they have given up their leadership as the Nasdaq outperformed, outpaced, showed strong relative strength to the other indexes, and that does include the S&P 500, but the Russell was weak, and it just played catch up. So it is the strongest market. We can take a look at the IWM, and strongest relative terms, just meaning how rapidly it moved up since really October. It doesn't necessarily mean the biggest percent gainer, but the most relative strength on this most recent rally. So that's where we'll start the video. Strength, strong, and stronger in the Russell. We always like to take a look at our strong stocks getting stronger. And just a quick scan of the market, the S&P 500 shows us these names. And today's strong stocks getting stronger, in this case all-time highs, or technically new 52-week highs, we're sorting by market cap. So Advanced Micro, AMD, Applied Materials, AMAT, Intercontinental, DuPont, Constellation, and Fastenal, just to name a few. So what's the point of looking at these charts or these stocks, these names? They just sort quickly to the top of the list. Stocks making new 52-week highs, and in some cases AMD is one of them, new all-time highs. So just want to find out which is strong and expect it to get stronger, and establish call positions in the direction of the trend on pullbacks, not at all-time highs. So these can be little scan candidates to write down and trade pullbacks. But Applied Materials is a good example that we can't really get into these pullback trades. Compare this, which is retracements or pullbacks to the rising moving average, versus what's happening now. This is untradeable. Yes, it's strong getting stronger, but it's not tradable from a risk-reward standpoint. It is too overbought, too elevated, and has rallied too quickly. We don't want to step into that because the risk is for a deep pullback. So AMAT is a good example of something strong, but just because it's strong does not mean it is a candidate at this exact moment. And just quickly through some of the other names, DuPont, not making new all-time highs, but making a new 52-week high. Constellation Brands, similar, and other stocks included. Here's Fastenal, which is similar. Strong stock getting stronger, pullbacks, retracements. One other one was brought to my attention. It was Twitter, and that is not an all-time high, and nor was today. This is sort of why we use computer programs to scan, but at the same time, yesterday made the 52-week high. Today's strong. Today's actually a new closing 52-week high, but that's not what it scans for. It scans for stocks making the highest high in the last year. So it's kind of giving a step inside why we're using the scan and what we're doing with it. So back to the bigger picture. We still have this concept, and this is where my mind is, and some of the trades are what's influencing my trades right now. And we'll just take a look at just a few years back. We can study this in terms of end-of-year performance, holiday drift, etc. But my simple way to explain this is that we're getting bullish drift into the end of the year. And this is back, and we can look further back, but 2017, right here, 2017 going into 2018, when that seemed like the top of the market, 2,700. But January gave us pretty much a full month of every day was up. And then the crash. So that's a little bit risky. And similar outcome from 2019 into 2020. And that sure does seem like a top, but it keeps going. That seems like a top. And it kept trading higher. So that's, I think, as we go through December, half of December is over. We're going into January, not too long from now. And I just want to draw your attention to this bullish end-of-year holiday drift that transposes, or keeps going really, into January. So the two strategies are to take small, long trades, short-term duration, a few days to maybe a few weeks in a duration position, in leading stocks or the market itself, understanding that the risk is for a steep, sharp, sudden, and unknowable pullback. That is your risk. But if you are a bear and you're trading short, bearishly, or put spreads or in-out spreads or risk twist spreads or other trades that benefit from a drop in the market, what we'll experience is little paper cuts, frustration, and you'll want to abandon your strategy. And unfortunately, a lot of times people will abandon that type of strategy that takes small losses repeatedly before the big win comes into the market, which is random and unexpected, but nonetheless, high probability of a snapback. So I don't want to say comfort yourself necessarily, but if you are frustrated with the market, keep in mind that it might very well drift higher, easily drift higher, but there is a reckoning coming. Nothing lasts forever. Not even straight up bullish market drift lasts forever. And this is short-term trades. This is not talking years in the future. We're just talking December, January, and then probably some type of, we'll call it a volatile event. That means downside pressure emerging in the equity markets. But being here in the mid-December, we aren't there yet. So do you want to keep trading small bullish clips and have the risk be a rug pull? Or are you more of the mindset to take fade or short trades, take a few lumps, have a few paper cuts to play for that big win? I think that's what the market is ultimately in, structure or repetition mode, just using 2017 into 18 and 19 into 20 as a little guidepost. Wednesday, we have the Fed meeting. That's going to take place mid-session on the 16th of December. So be sure to watch that as well. And any other economic news or earnings or reports. Anything with stimulus, anything with quantitative easing, interest rate policy, or other political or economic headlines. But as always, be careful and safe. This is Corey Rosenblum with tonight's Theo video update for December 15th, 2020.